So happy that you are here with me, spending the rest of the hours together. We have some interesting content to cover, which is related to small businesses and related to government compliance. So it will touch on all the filing requirement, what we need to pay attention to, some stories that I know are really worth sharing. In small business world, folks like ourselves, sometimes we give ourselves a little more reason for not doing certain things and why. A long time ago, I have this business owner. He doesn't really speak very good English, so he obviously doesn't read, and did something wrong and didn't collect sales tax for, who knows, maybe 15 years that he was in practice. He was in his business and just didn't know it is even applicable to collect sales tax and pay sales tax. Of course, the reason is so sounded. He doesn't know. He doesn't speak good English. And even if government has notice over to this person still don't know. But in the end, not only he owes all these years taxes, and he will owe it all the way to his grave, and he actually have to pay it out of his estate for the sales tax dollars that he owed. So with a lot of these kind of situation happens, so we know that being small and being limited to the resources is not a good reason for you not to know the requirement of the government. And our goal here is really to talk with you and prepare you for that, and making you be aware of what's out there, and then you can make conscientious choice and be very smart about it. All right, so now let me share my screen and with a PowerPoint. And the PowerPoint is really nothing like you have to go by these numbers and those letters I wrote. No, and it is really a guideline for me to make sure that I covered everything for you and make your time well worth when you're with me. Okay. And before I start giving you the content, I just want to brag about myself a little bit. And I wrote a book last year, and it's called Appointment with Ying at 8 a.m. Let's hope I got my second book, Appointment with Ying, at 10 a.m. out this year as scheduled, and I'm working on it. And it's a set of 4 books that I'm writing to talk about business process. When you start a business, that's 8 a.m. You develop your business, that's 10 a.m. You buy and sell, expand, that's 2 p.m. Then you retire, 6 p.m. And by the time I write the 6 p.m. book, I think I will be literally physically there. Then I can write with a personal conviction, so I can write properly of that last book. I'm also on the National Taxpayer Advocacy Panel, and this is not an easy panel to get on. So much of a scrutiny of my personal history, practice history, and then they think that you are a pretty proper practitioner and you are good with your taxes, and so they select you to be on that panel to advise IRS to be a better agency for the citizens of the United States. And so I am one of those members, and you can write to me and voice your concern with IRS, and I will for sure bring that in. I already have one very valid information input for IRS, and the taxpayer wrote to me and I submitted it, and it's on our docket to be discussed. Pretty cool to see that. and no responsibility disclaimer. And of course, of all the things I talk about, because we're talking about very current matters, so it is very easy to be interpreted wrong by today's understanding. So tomorrow the government has a new announcement, new clarification, then we continue to update, but that doesn't give a rubber stamp on today's content saying that, oh, it's all correct. No, it's not. It is the best, it is the most correct version my experience, my firm's experience can offer, but whether it is 100% corrected or not, it really depends on the future development. But we'll definitely keep you posted. On Saturday, I always spending that time to update on the government issues, government new rules, and so you can look into my webinar to see what I talk about. And this Thursday, I will be talking about small business owners estate planning. Believe it or not, we have a lot of questions in that area coming up because COVID-19 does send people to the deathbed. And so there are people thinking, small business owners are thinking, and if you haven't really bought any life insurance and rushing buying one not going to help, it's not going to be covered. But if you have something already, and a community CPA has a very down-to-earth way to talk about estate planning. So I hope you join me on Thursday, 3 o'clock this week. Let's get to our today's content. The reason we talk about compliance, the reason we say it is double down on small business, and let's just go through what are these triggers? What is triggering us to face this kind of issue? So far we know people are getting stimulus checks, and the EIDL stands for Economic Injury Disaster Loan application. That 10K, up to 10K, that application you send in, some people got 3,000, some got 1,000, some got 10,000. Those are loan advances free. Even if you don't get any loans, you got the money to you for free. Okay, that is a forgivable loan to you already. So you have that as an income. PPP, forgivable loan, is another one. And we're going to talk a couple of more slides on PPP because that is so important for you to know what to do so that you can always, you can always be knowing that this portion of money I got is not going to trigger me to pay it back or to pay taxes for. Okay, so that is PPP, forgivable loan, and we'll talk about that. Local government grants, and you might be getting local government grants in the very beginning or end of March, and now you're getting into PPP, you're getting into retention credit, all of these federal benefits you're getting. Do you know that there are requirements at the state level? There are different level of government. The state level government might say that if you got this, you can't get ours. So you want to really do some study on that. And there again, there can be compliance issue coming out. Unemployment benefit expanded, of course, but what if you are paying yourself on PPP payment, but you're also on unemployment already, so that could trigger compliance issue for you. And we want to let you know what they are, so you can kind of thinking through exactly what applies to you. Then the next thing that you can look into our service, have community CPA help you to digest what all these free things you have, which one you should take, which one you should probably give up, or maybe with a different time, you could take all of them. So That part, no way we can cover in 1 hour for all of you, but yes, we could cover it for you, and we of course welcome new clients to Community CPA. And the retention credit for employer, that's another big one. A 20 people employee company, we will be talking about $30,000 to $50,000 a quarter saving for the next 3 quarters. That's how much you would get it. Okay, so then you're probably gonna wondering, well, should I get another one if I get this one? Such a great question. And if you are really doing your calculation, maybe you will say, out of this 6, I could only take 3. Or you would say, out of this 6, I am going to take 5 because I stretch them in certain ways. All right, so let's go on to our question for you. What small businesses are facing with all of these free money coming in, and these things are just, you know, someone just got $150,000 money deposit to their bank account. That just sounds so good. And sure, I congratulate you for getting that PPP forgivable loan. But to make it a truly forgived, and there's some work to do. And I would say that is not hard. You just need to know what to prepare, and don't get scared. Don't tell me that because of that you're not getting it. No, that is definitely wrong. The compliance piece is definitely smaller than the benefit piece that you're getting. So, small businesses, let me tell you, in today's environment, I am a small business, okay? I'm with you. That's why I can talk. You can relate with me. And we are still facing regular IRS audit, regular DOL audit. DOL stands for Department of Labor, okay? And we are still facing the state audit. They're not stopped. And you know, the private sectors, and when we go through COVID-19, a lot of them couldn't open and we closed the door. But the government didn't do that. The government all got employed. They're still getting paid. They're working from home. So that just tells you that their work is not done. We're still getting audit files coming into our firm. IRS is still auditing. State is still auditing. So that is not gone, folks. So you still need to make sure your 2019 tax is filed properly. And don't imagine that, oh, we're in chaos, so I probably can do my 19 a little bit bad and nobody gonna pay attention to me because everybody is busy with COVID-19. Not true. And compared to the rest of the world, the government side of audit only gonna get, they're not getting really better. It's not like they do more, but they will keep their workload because they're still employee, all the government officers. Right? So just be clear about that and don't imagine audit are stopping. They're not. Daily business activities are different, and the tracking expenses might not be the priority of small businesses right now. And so I have people saying that, oh, I don't need to do accounting this year. What a mess. What do I have? I don't need accounting. And I'm just gonna wait until the end of the year. You are so wrong on that, because all of your free money requires better accounting if it is not the same. PPP requires it, state grants requires it, and your retention credit requires it. And what else I forgot? IEDL 10K, that requires it. And the only thing didn't require you to do daily bookkeeping is stimulus check, but wants your tax return. And you don't think they're gonna audit your tax return, raise your income by so much that you're gonna return the stimulus money? Oh yeah, I can see government doing that. Okay, so it is really important. you are doing better job than before. And I don't give you, I guess I don't feel sympathetic just because you are now you are in hard time with your business, you don't do bookkeeping. No, I don't think so. I think you're in hard time. This particular hard time is more time on your hand, but it just feels hard. Did you hear me saying that? You got more time in your hand and you just feels hard. Feeling doesn't count. There is no deduction line called feel depressed, deduct another $5,000. It doesn't come. No such a thing. You're depressed? That's too bad. IRS still at your door and the state agency is still at your door. You're a small business. You don't provide any proof. We're just going to charge the motherhood of income on you, and you return stimulus check. You are disqualified for PPP. You have a lot of things to be disqualified for, and your income statement for 2019, 2020 is so important. Okay, so that you had more time, you should do better job. And now you got more time to shop around for CPA firms. You should naturally land it with community CPA. I could not see any other CPA firm. I haven't seen any other CPA firm does what we are doing, okay? Providing so much of good advices to the community. We just want our people, the small business owners, the teeny little business owners, and we just want you to get the knowledge so you can be smarter, okay? Free money is getting to the small business owner's bank account. Compliance is yet to come. So this is the whole reason why we need to do better accounting, why we need to do a better planning, and knowing that audit did not stop. Anything government does did not stop, because government didn't shut down. Only restaurants, salons, spas, and private owned businesses are shutting down. All right, now let's talk about this big item of PPP. A lot of small businesses are getting PPP just recently, okay? You were not big enough to be funded in the first round. And remember, those are the people who gets 10 million at a shot, and you are not big enough that for the banks to process you. But this second round, it is really becoming the small businesses round. There's a small amount goes out, and if you are single owner and paying salaries to yourself, and you're qualified for PPP. But now let's just look at the PPP dollars. In order PPP dollars to be free, to be forgived, you don't have to pay it back to the bank, and you don't have to pay taxes on it. And you, number one, you have to spend it. Spend it within 8 weeks of time, starting the date you got your money. Okay, and you heard me very clear. Yes, you have to spend it within 8 weeks. So I say that today because that's what it is today. And there are people, for example, their accounting, AICPA, the Accountant Association, and are giving recommendation, national taxpayer groups are giving recommendation to SBA and IRS to say that the 8 weeks maybe not practical because we are closed. What do you want us to do? So, but the PPP, the spirit of the PPP is irregardless whether the business is open or not. The spirit of PPP is to get people off unemployment. So even if you are not open, you're gonna pull your people back, pay them 8 weeks payroll. And your people might say that, well, I don't want to come back because my unemployment money is even more than what you pay me. I couldn't believe that's the fact, but you should remind them that their benefit gonna run out. If COVID-19 gonna last all the way to the winter, where did you find the other 13 weeks? You think the government just gonna keep on printing money for the state to pay you unemployment until the COVID-19 is done? No way. So it's better to save your claim for later. So as an employer, you should pay. As an employee, you should get. Okay, so that covers 8 weeks of period, beginning of the date you get your PPP dollars, and it's only cover the following expense. Payroll expenses, that's number 1. Number 2, your health insurance. Number 3 is your 401k contribution. I am only talking about the employer portion, not the employee paid portion, okay? And then your rent and your utility. Utility only includes electricity, gas, and the water. We're not talking about internet, okay? The reality is that internet is not essential utility. You could live without internet, even though you disagree with me, but the reality is we have lived our life without internet, right? So that's not part of the utility. And no, once you spend the PPP dollars according to the guidelines, and the optimal result is you don't pay it back. Okay, you don't pay it back, it is yours. You keep the money. It's like grandma give you that money, you keep it. And then you say, well, okay, how do I exactly keep it? Can you tell me the steps of keeping that money? Sure. There is a 1, 2, 3, 4 steps, okay? And the first 3 steps is for you to have paperwork to give to the bank where you sign your loan document. The first paper document is proofs of how many numbers of employee is a normal number for you. What is the wages you normally pay? Okay, that is very loosely. I loosely define that to give you the spirit of it. You don't have to. We don't have to dig into that right now. My next slides we go in there. But right now, I just want you to know that the spirit of PPP is for you to pay people like nothing happened. COVID-19 wasn't there. COVID-20 wasn't there. No COVID. Only beers is there. No virus. Right. So we're defining the norm. So let's say if you say my norm is 5 employees and $100,000 payroll. Good, that's your norm, okay? So you need to supply that document to show bank that your norm is 5, your payroll is 100,000. That's number 1. Number 2, you will show the bank in 8 weeks how many employees you paid and what is the wages. See, you supply the history, that's 1 document. The second document, you supply the current date. The 8 weeks you have, what did you do? Then the third one, it is a bunch of copied receipts, canceled checks, things that prove that the money did get paid. With those 3 set of documents, then you sign a certificate with the bank and certify it is truth, nothing but truth, and you're done. But of course, if you did lie any of those ones, you sign that certificate, that's a legal binding document, you could be charged with felony. And so those 3 documents I was talking about, history, number and dollars, current number and dollars, receipts. Those 3 documents that I was talking about, you need to get them ready. The first one, the history, should be ready even before you get your PPP payment. So you should know that already. You can't be calling me, tell me that, Ying, I got my PPP dollars, and what is the number of employee I should pay? What is the amount I should pay? How could you not even know that? You should know that when you applied for it. All right. So if you do know, if you did apply for that with the knowledge, then you just use what you fill up on the 2483 form. The SBA form, you actually has a monthly cost, and you also have the number of employee there. You already told SBA. All right, so let's go take a little deep dive, not so deep, a little bit deep. and on the PPPers. So you got your PPP, and the date you receive that money, and that is an important date. You can't be telling me that you don't remember, okay? Normally, that should be 1 day before the money arrived to your bank because you signed the note with the bank that day, okay? So you mark that day. Let's say that's May 1st. What we recommend you is to have the bank put that money in your payroll account. And if you did the PPP with a bank that you never did a business with before, because your bank don't want you, you're too small, so you went to another bank, you got it, and you don't have account with that bank, then you just simply have the bank open up account for you, right? So you have that. Once you have that account, my dear, all you need to do is to write checks out of that bank account only for the qualified expenses. So you know the date you got funded, then you're going to calculate 8 weeks. See, on May 1st, and then your 8 weeks last day is June 26th, not June 30th, not June 25th, and we're calculating exactly what day. So the checks need to clear before 12 midnight on June 26th. And you may say that, oh, Ying, you're making it so hard. I don't believe you. Trust me, that's what the book says. But AICPA and other accounting organization did go back to SBA, says that, come on, it's not practical. You can't be telling us that we have to cash out that day. What if we pay the payroll check out on June 26th? My employee hasn't even got a chance to cash it yet. Are you silly and you don't want me to count that payroll? I totally understand your concern. But as of now, that's not the case. So to make it right, to be sure we got the money for free, ladies and gentlemen, I think it's worthy of effort to plan to get everything out of your bank at the end of the 8 weeks, right? You agree with me? Now, 8 weeks, you keep records and you are going to do head count. And this is where I say the history. Remember I said you have to have a documentation for the history? And look at that. You can get history from January to February 2020, employee number. And you can also get the history from February the 15th to June 30th of 2019. Okay, but maybe when you calculate those histories, you may say that, oh, Ying, one of the, from January, February 2020, I actually had more employees. But February the 15th to June, I had less. So in terms of employee numbers, what do you say? And I would say choose the lower one, right? Choose the lower one so your 8 week can be easily met. And then on the wage level is what you got done in the first quarter of 2020. That one, you don't have a period. You just have first quarter. You want to make sure that however you paid employee, you need to restore what you paid them before in January and February. If March you close, right? And let me mention this to you. Let's say you got 5 employees as your number, but your 5 number is not the same 5. So the 5 you had before, they are all on unemployment. Doesn't matter what you say, they don't listen to you, they don't come back, they don't want to do work with you anymore. So you lost them. Now you got your PPP. You better hurry up to hire 5 new. That's all. Okay, when you do 5 new, and you don't have to benchmark to what you paid to the people before. So new is new. You may be paying more, you may be paying less. Depends on their experience, right? So that is where the wages is coming. And application for forgiveness, as soon as your 8 weeks is up, do not wait, okay? And you know that if you got funding on May 1st, you actually ends on June 26th. I would already contacting the bank maybe couple of days, couple of weeks before, asking them, hey, do you have any guidelines, documentations for me to do so that I can apply for forgiveness. And my day is June 26th. And when is the deadline for me to do that with you? And you want to have that relationship with the people who give you this PPP. Okay? Now, what happens? You got PPP, and you just didn't open the door. And you just didn't hire anybody. And what happens to that money? That is money cannot be forgiven. Cannot be forgiven means that it is going to be a loan. It is going to be a loan to you, just like the other loans you got from somewhere else, right? But this loan has a better rate, is 1% for 2 years. So that's why I said you need to pay it back within 2 years. You need to pay interest. Interest is 1% annual rate. Okay, so if it is 10,000 and 1%, we're talking about $100 a year, and or 1,000 a year if it is 100,000. So it's a pretty low rate. And however, but you cannot use this money for other purposes, even though you are not going to be forgiven, because you might be just holding the money until the door is open. Then you start paying people, so you borrow that money. The key is that you cannot use your money that deposited on your bank right now. You say, I'm going to buy a convertible. No, you cannot do that. And if you don't spend the money on wages or on rent and the utility, and you are basically not in compliance for the spending, doesn't matter it's forgivable or not. Okay, this money is really just for payroll. You may get it for free, you may need to pay it back, but it is not for anything else to use. Okay, and your bank will decide on that. If you say, well, 2 years is up, I still didn't open. No, that wouldn't be the case. I still didn't really have cash flow to pay it back. Then your bank and SBA at that time will come up with a solution, because bank don't want your loan. Bank never thought they're gonna take this loan from you. They think that they got the commission, and for making your loan, they're already a hero. And they didn't really think of having you forever be on their book and borrow money from them. You didn't even have a collateral. They didn't even check your credit. And probably a bunch of us and don't have a good credit. The bank never want to do business with you. Now you are PPPers, and they may just tell you that if you stay on, I'm going to charge you 8%. Then that wouldn't be good, right? So it's a relationship with the bank. And you will be charged criminally if you are not in hardship, but you applied for PPP. So far, let me tell you, so far I have not met anyone who are not in hardship in this giving environment. Maybe if they live on the moon, they would not have COVID-19. As long as they're on Earth, we're probably all affected negatively by COVID-19. Well, I can think of a company like Zoom.com. They should not have any negative impact. They're just booming, so they should not be getting PPP. I'm pretty sure they don't. So getting PPP, you have to demonstrate you are being impacted. How could you not? Everyone who is listening to me right now, if you tell me that you were not impacted, I want to meet you, because I think you're coming from moon. You're not humans here, okay? All right, tax filing time. And this is the thing that I want to say, that the compliance is coming in really hard right here. When you start wrapping up 2020, you need to report all your government free money and a forgivable portion of PPP money. This part, do you know how to report that? You will get a 1099-C from your financial bank or institution. and you need to treat that specially. So you're gonna report that in your 1040 or in your company tax return as a 1099-C. Then you will choose a exemption code, and that code would make sure that it's not going to be included in your income. That's number one for forgivable portion of PPP. For the loan portion of the PPP, so, we talk about a portion get forgive, a portion doesn't if you didn't do certain things. And I'll show you the 100% forgive, a 50% not forgive. How does that work? But right here, the portion of loan portion, how do you report that? Is that an income? No, it's not income. You can't tell me that's income. And that is your liability. But your accountant may not know, because all they see is a deposit on your checking account or deposit on your bank account, and you go PPP income. Well, they don't know what PPP is, so they include it as your income. No, they're not your income. They're your liability. So make sure you know that PPP is something that should never landed on your income. It should always be forgiven or is in balance sheet. And the grant money, how to report. Some people get grant money. We have a lot of our small businesses that where our clients are getting grant money from the state. And let me tell you, that is taxable, okay? You need to report that as an income. Do you know what, if you don't report, you know what's gonna happen? And the state knows that you didn't report, you'll be audited by the state. The government gonna pull out the income transcript. They can see that the state gave you $25,000 and you never showed up anywhere. They will charge you and they will start auditing you, and here you go. And I don't want you to come to me and tell me that, Ying, you remember back then you did a webinar, you said that audit didn't stop. Here, I prove to you, audit did not stop. I got audited. No, my client don't get audited because we do a lot of work for you. And if all of our clients get audited, we'll be out of business already. We have over 9,000 clients. And our client hardly ever got audited. But the one who come to resolve audit issues are mainly clients from other places has already been in a bad situation. So we're just the people who fix issues. But we can fix them really well. So if you run into that situation, you can rely on us. And some money might have to be returned before filing taxes. Let me give you some example. If you receive the state grants, but you also receive the PPP, and watch out, a lot of states are saying that you have to return the state dollars because they don't want you to get both. And if you did get both and the state grant is higher, PPP is less, maybe consider return the PPP and keep the state grants. But I am saying it because there are states doing that, but whether the Iowa is doing that or not, I actually don't have a sure answer yet. I heard other people telling me that they are advising people to not get both. So I'll have to look and I will update people, but this is a possibility, all right? Then if you received PPP and also receive retention credit, and this two doesn't work together. Retention credit, let me just quickly mention it to you. Employer with more than 2 employees and normally should work on retention credit. That credit basically means you don't need to pay any 941 taxes if condition exists. If you don't pay that, that money is a saving for you. You don't have that expense anymore. But if you got PPP, that doesn't apply. So that is something, if you do it in different time, that might work. But I am so sure the government will address that in detail. But right now, let's say if I got my PPP in April 15, then on June 10th, I'm already done with PPP. And my store is still closed. I'm still not open. And then I can go on for my retention credit. So that is how things are going there. And you received unemployment, but also receive payroll from PPP money. So let's say I am a employee for a restaurant owner. My restaurant boss received the PPP money, so I'm getting paychecks, okay, for 8 weeks. But I am also on unemployment benefit. I'm just not gonna tell anybody. I'm just gonna get both, okay? And that doesn't work either. And the thing is, right now, the government came up with new guidelines. If you are getting unemployment benefit and your old boss called you, oh, come back to work and come back and I give you the PPP money. And you say, oh, no, boss, I'm just going to stay here and you don't need to pay me. And now you cannot just say that. You have to write a letter to your old boss saying that I refuse to take PPP, I'm going to be on unemployment. If you do that, your unemployment benefit will disappear and you also don't get PPP. All right, so this is the compliance coming in. And even if they don't catch you right now, I promise you, workforce will come back to review that. Definitely. Because whoever got PPP is literally public knowledge. So if you work for this restaurant, whether this restaurant got PPP or not, nobody need to ask. We can check it. So workforce can check it. Then you will get into trouble. Either your boss didn't tell you or you refuse to come, right? Either way, your boss got into trouble or you get in trouble. So it is double-edged sword and you need to really consider that. So in what case 100% of PPP is forgivable? Quick example here. If you received $100,000 on May 15 and you spend it all between May 15 to July 10th, okay? Spend it all. And you restored the number of employee, you restored the regular pay grade, and by the May 15, which is the first day you started to do the PPP loan, and then during the 8 weeks, as a result, $78,000 paid to the salary, $22,000 paid to the rent and the utility, and you restored the number, the dollar for the employees, and you apply to forgive the loan, and it's 100% forgive right here. So what can happen is you will receive a 1099-C, $100,000 from the bank at the end of the year. You will take that to your tax return, apply for special exemption. Then you have that for free. You don't even pay any taxes for it. All right? It's a really good deal. Now, in what case only 50% of my PPP will be forgivable? And in this case, same thing. And we have 100,000. We spend them in 8 weeks. And but you restored only half of the number of employee. Okay. See, I didn't mention about the wages. I was just talking about the half number of the employee. So now the calculation. So the employee I didn't mention because you restored half, they're all new. So the wages is irrelevant anyway, but I paid out 50,000. So that's the total wages you paid out. And your actual rent and utility is 22,000. But qualified other expenses, qualified rent and utility, and should only be 1/3 of your salary. So because the salary pay was 50,000, so 1/3 of that is what? Is $16,667. So even though you paid out 22,000, you're only allowed to be forgiven for that 16,667. Okay, so now I'm adding the qualified expenses together. That's a 50,000 qualified for forgivable, and a 16,667 qualified for forgivable, and now the total is 66,667. Now, because you only restored 50% of your employee numbers. So we will time 50% to the eligible to be forgiven amount, that is 66,667. So your forgivable portion of loan out of that 100,000 is $33,334. And you will get a 1099-C for $33,334. And you will get a loan with that bank for $66,666. That will stay on your balance sheet, not your income. But your $33,334, it is a 1099-C booked as other income and reversed out as an exemption. All right. So that kind of give you, I think in your mind, you're thinking really hard. Okay, now I know. And so portion of the PPP may be becoming loan. Okay, so that's good enough. I mean, our webinar is actually recorded and it is on Facebook. It is also on our website. If you go to previous webinars, you can pull it up. But I only expect you to pull this one up before Saturday, because by the time we reach Saturday, we would already update information. I would reiterate the places where you need to know more, and all changes coming along the pipeline, I will keep you posted, right? So this is, so far, we talked about PPP. Remember, going back, we talked about the important things to remember as PPPers. And, you know, what happens cannot be forgiven, no big deal. And then we talked about how PPP overlapping with other grants. And this is really scary because you don't want to get a little PPP and not even forgiving, and then you give up on the one that totally can be written off, right? So really calculate, be frugal with your money, all right? And then I had example for 100% PPP loan forgiveness. Then I also have a example for half of that didn't go. Actually, more than half didn't go, right? Now, I want to briefly talk to you about the retention credit, because I know you are not really in depth with the retention credit. And especially if you don't handle your own payroll, you really don't know what that is. But your payroll providers should know. If you are a small business and you're stuck with those big payroll company, bad deal. You really need to change your payroll company to someone like Community CPA who actually know you and know your account, because this retention credit is not automatic. It is really one client at a time, and you have to apply for it. What in the nutshell, what happened is, it says that if your gross revenue is 50% of less of your same calendar year period. For example, I got all my PPP benefit done, and my state is still locked down. I'm a restaurant owner. I couldn't really operate a full restaurant. My gross sales, I only do delivery, curbside pickup. My gross sales is definitely more than 50% down. Okay, so on July 1st, I'm operating halfway. I am down. I don't have enough. I didn't make same amount of gross sales like I did last year, July. Last year, July, I was making, $200,000 a month on gross sales. But this month, it's only $50,000 gross sales. But I still have to hire employee. Listen up. That people you hired and all the Social Security, Medicare that you are paying, and that do not need to be paid. You have that retention credit right here. Okay, so this is more for the employers, benefit because it has nothing to do with employees. They still going to be withheld, same thing. They still go by they don't have to know this part. They don't have to get involved this part. They don't lose their benefit because the government giving to you, giving to your small business owner. The government is not cutting short on your employee. So your employee can be happy and you also can get a little saving. All right. I just say that this retention credit is something that if you are a small business, the kind of trouble you cause those big payroll company, they don't even want to bother. They rather you don't know. But I want you to know because it is a good benefit. All right. But in order to do that, compliance requirement is that you have to document and you are really in that situation. So what does that mean? That means at the end of July, you're going to print out your gross sales POS system report. You're going to attach last year's July next to it. That become your eligibility document. So important. They ask you, okay, for this particular one, the government asks you to save it for 4 years. Right? You heard me, 4 years. So they don't come to audit you for this one right away. They already said they're not going to do compliance audit on this, but they have 4 years time to come to do it for you. So make sure that you definitely watch your eligibility and save your document. And don't tell me that your POS system broke and you don't have record anymore, so you cannot prove the eligibility that time, then you're gonna pay it back, all right? So now I want to kind of give you the possible hot audit post-COVID-19. So what I mean by what I'm saying here is I want to tell you as soon as COVID-19 is coming to an end. Right now, when I say coming to the end, I don't even mean the virus is coming to the end. I mean, the government decided dying is okay. They're just going to open up economy. So people dive into life too early. We still have millions to die, but here the government is forcing everything to go normal. Okay. If that is the case, and there is couple of hot audit, I will tell you what that will be, okay? And the IRS audit on business losses, for sure, coming. And business losses in business are so important. It's almost like a currency. And if you recall when Trump was running for presidential election, and there's talk about him having over $900 million loss in his tax return. So he doesn't need to pay taxes for like the rest of his life. I think the way they calculate, he would live to up to 150 years old. But, you know, for the rest of his life, he doesn't need to pay taxes because he has this business loss documented. So I want to say that 2020 is everybody's business loss. And I am sure most of the small businesses, we will have a loss, but you cannot not document. You really need to document your loss because they can come back 20 years later to audit you, because if your loss goes on for 20 years, they can audit back to the year that beginning of the loss, okay? And with PPP, certain of expenses should be deducted, should not be deducted twice, okay? I made a mistake there, okay? Disclaimer. And what I meant to say is, let's say that salary, you were talking about the 50,000, remember? And 36,000 was forgiven by the PPP loan. So that portion, that 36,000 cannot be deducted again, right? Because it's already paid by the free money. So that's what I mean. IRS audit on 1040 income to disallow your stimulus check payment. To audit your 1040. If I want you to spit back that stimulus check that you got, and if I am running a place where I run so much deficit and I need you to elect me again and I want revenue, I make you spit that back. And to make you spit that back, I audit you 1040, and I make you increase your income up to a certain level, and you have to pay it back. Very simple. Okay. So these are hard audit, and I am predicting with my experience working in this field. And state audit on business deduction and income inclusion for state funding. You know how the state give you money and they want to see that being reported, paid taxes for state taxes. So that will be a motive for them to audit you, and they know exactly who to audit, because when you got the money, you give them the W-9, you told them your EIN number, you give them your business name, and they just gonna assign a couple people, audit all of these people. Simple, okay? And I would do that if I'm the officer in the state managing revenues. And a business who took retention credit but still deduct 401k taxes, 401k cost, that's very easily done because payroll is running ahead of time, and you already deducted payroll expenses out of your income statement, but here you don't pay and you don't need to pay, but you forgot to reverse it. So that's very simple. And there could be a task force set up by IRS and coming to audit everybody who had a retention credit. Department of Labor payroll audit for employees who should be hired back due to PPP. Like I said, if you are PPPers, your name is with the government. And DOL could literally look at the list of the company who got PPP and go back to figure out whether you underpaid people, whether you paid people. All right, so that's another audit, can be really, really hard. So I felt like I spent all my time to scare you. Don't be scared. And I'm not trying to scare anybody. I'm just trying to tell you that the knowledge I give you today, and to make you be more vigilant so you're smart at what you want to do. And here for 2020, if I have one recommendation for you, it would be you need to do your tax planning this year. If you have never done it before, perfect year to do it with community CPA. We always do tax planning, and we always, our November, December is the most busy year, not April, not March, okay? Because we take care of all our business clients in November, December. We already planned everything before they start a new year. So this year is so important. You want to plan, because your business, if you received government assistance, you should plan. If your stock went to negative, you only can deduct $3,000, and you want to deduct more, you don't know how, you should plan. And if you start a new business, you should plan. And your business changed the way it was working, now you become a partnership, you should plan. And you borrowed money from SBA, you definitely should plan. And you brought merchandise, from elsewhere and landed with a litigation, you need to plan that loss too. And I want to say that COVID-19 is not just destroying economy, and it's also destroying some families. And people couldn't really get together without all these worry, these pressure, and becoming a family issue. There's more divorce, there's more family changes. If that ever become your case in 2020, you need to plan, all right? Because even if you walked away from your spouse, do you know that you may not be able to file separately this year? You have to plan, all right? So, my last thing is to tell you that we have this 3 p.m. webinars. You really should go to our website to look at our webinar, please. And our website is communitycpa.com. And you can look at our webinar and learn things. Just 1 hour. 1 hour you can afford. I know you spend your hours for something else, totally no value. But if you could sit here and listen to me talking for an hour, I know you're gonna be benefited from this, okay? And I really appreciate your time. I tell you, I really, really enjoy talking to you. And I hope my webinar goes so well in your mind, and give me positive comments on Google. give me positive comments on Facebook, and go to YouTube, look for Community CPA, and give us positive comments. And I just need encouragement. I don't know what you're thinking right now. The only way for me to know I'm doing good is you give me positive comments on the social media site, okay? I'm looking for that, and please give that to me. And thank you for working with Community CPA, and we love you. Community CPA loves small businesses. Bye-bye.